Hello and welcome to Morning Trade with Money Control. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends, and most importantly, we will be addressing your queries during the show. So please keep commenting on our live feed and we'll have your questions addressed by a technical analyst. But before introducing our guests on the show, let's see what the global handover looks like. European markets seem to have taken a breather from the recent rally. Stocks closed slightly lower to begin the new month, with investors digesting a fresh round of corporate earnings. US stock futures trade lower. Benchmark indices closed with minor cuts following a volatile session. Stocks in Asia see deep cuts as Hong Kong's Hang Seng leads the losses. Inflation in South Korea sees fastest rise since 1998. Kospi down nearly 1%. For our own markets, SGX Nifty signals a weak start. Stocks in the spotlight today, ITC, Zomato and Escorts. A lot of macro indicators to monitor this week as well. Some of it already released, while some key statistics yet to unfold. We take a closer look at the state of the economy and its possible impact on the market mood. Okay, let's get going and discuss some of those stocks and technicals of the market with Kunal Shah of LKP Securities. Morning, Kunal, and thanks for joining in. The handover and SGX both pointing to a weak start. So, how's the day likely to pan out?
Good morning, Karunya. I think firstly, if I talk about the markets, we have seen a stellar run for the markets from 15,200 to 17,200. So 2,000 point rally, what we had seen in the July series, the previous 2 months before that where the pain was there. So I think it's time for the markets to cool off. I think the markets will now try to consolidate in a broad range. It will now shift to a sector specific and stock specific approach going forward. On the downside, I see 17,200 to be a strong support on an immediate basis. And the upside resistance is faced at 17,500. Again, this is the strike on the option front as well, where we have seen some significant amount of call writing happening. So I think this is going to be a 300-point range for the Nifty index going forward. We are heading towards the RBI policy as well. So definitely volatility is going to pick up for the next couple of days as well. So for the Bank Nifty index as well, 38,000 to 38,200 is a resistance zone. So Bank Nifty might also go into a consolidation phase where 37,500, 400 is a support on the downside, and the immediate resistance is placed at 38,000 levels. The approach should be buy on dips, or don't be an aggressive buyer at the current levels. Wait for an ideal dip, which you should get in the morning trade as well. So utilize that dip to buy the index. 17,200 is the support. On the upside, I'm expecting 17,400 and 500 levels to be tested.
Okay. Want to also shed the spotlight on some of these individual names that could hog the limelight today. First one will be ITC. Late last evening, the numbers were out for the quarter gone by. Looks like the giant has finally awakened. Good performance seen there. Profit has jumped nearly 40% YOY. There's strong top-line growth. Operating performance has been very impressive. Revenue growth is also slightly over 41% actually. And there has been a broad-based growth across all the segments. So good gains coming in their commentary, outlook also looking pretty okay right now. ITC last 1 week, 10 days, consistently trading above that psychological mark of 300. So where do you think is the next big level for ITC going forward? What should investors, traders keep on their watch list?
I think ITC is one stock, Karuna, where it has been a street favorite. Overall, if I look at the FMCG pack, when the inflation data was concerning, when interest rates were rising 2 months back, it was the FMCG pack which was seeing a good amount of selling pressure. But if you look at the ITC chart during that phase, it was just consolidating in a sideways trend, which clearly indicates when things get better up for FMCG as a pack, it would be ITC who would be leading the FMCG rally as well. And it was along with HUL. So I think ITC will be an outperformer going forward as well, where we will see consistent outperformance. Definitely, it should be added to one's portfolio. I'm expecting levels of 325 to 330 on the upside on an immediate trading basis. For a long-term investor, even 350, 370 levels are also possible. So I think always a buy on dip approach where you get good dividend yields as well. And plus, for a trading perspective, you can definitely see levels of 320 to 325 on the upside.
Okay, the next earnings candidate that could also be in the spotlight today is Zomato. They've narrowed down the losses. Last year in the same quarter, the loss figure was around 360 crore rupees, and they've almost halved it this time around to 186 crores. But yes, nevertheless, a loss reported for the quarter gone by. Revenue, meanwhile, a good uptick seen year on year as well as on a sequential basis, double-digit growth. 1,400 odd crores is what the top line is at right now. But the big headline that really stood out for us was also the fact that the food delivery business broke even. Talk to us about Zomato, because definitely had a very rough few months. Last week it touched that low of 41 odd rupees. It has seen a mild recovery from there, but still languishes below 50 rupees. So tell us what's the way forward here?
See, again, Karunya, it is a street favorite stock again when we talk about Zomato. If I look on the technical charts, it is clearly trading in a downtrend. There are lower high, lower low formations which are intact. The stock is definitely trading in an oversold territory. From the current level, the view remains neutral on the charts as well. On the upper level, I see 52 as a resistance on the upside, and on the lower end, I see 40 level as a support. So I think this is going to be a broad range for the stock. It will take time to consolidate in this range, and eventually it will either break out or break down on either side. From the current levels, if one wants to play into, I think one can have a buy approach with a risk-reward ratio which is favorable. So one can keep a stop loss of 44 on the downside, and you can expect targets of 50 to 51 on the upside.
Okay. The third name also on our list is an earnings candidate, and this is Escorts. Profit degrowth of 21%, largely because of the high raw material prices. And of course, it's largely on expected lines how the entire auto pack was likely to be dented or affected by escalating input costs. And that's exactly what happened. Revenue, on the other hand, saw a near 20% growth at 2,032 crore rupees. You know, the experts from auto space that we've spoken to in the recent past, and even technical analysts, are largely optimistic on many of these auto sector names, especially the ones which have good exposure to rural markets, given the decent rainfall that we've had this year as well. But let's talk about the technicals of Escorts. Last 1 month, almost 300 rupees added on the upside. So talk to us about the likely way forward. Right now it's at 1720 levels. Where do you think is the next big, stop for this one?
Yeah, I think auto as a space has been an outperformer, and this outperformance is likely to continue for the next 1 to 2 years as well. So autos as well as auto ancillary is something where the technical charts look very good. Specifically, if I talk about Escorts, Escort recently had given a very good breakout from its resistance zone of 1660. And from there onwards, it has been continually taking support at those levels and bouncing back. So I think at the current level, the setup looks good for a trading perspective on the long side, where one can place long bets at the current levels with 1660 as a stop loss, and upside I'm expecting levels of 1800 to be tested. So for Escort, the view remains bullish. Even the momentum indicators are in the buy zone, which indicates that the momentum is likely to continue on the upside.
Okay, all right. Kunal, just want you to stay on with us. We'll touch base with some of our viewer queries as well once we're back. I want to shift the focus right now on the macro picture. My colleague Siddharth Upasani is with us, and he tracks, the policy side, the macros, the state of the economy very closely. Hi, Siddharth, and thank you for joining in this morning. It's going to be an important week. We've already had the manufacturing PMI data, which is released. I think it's at a 13-month low levels. Services PMI expected tomorrow. GST collections, good 28% YOY growth seen there. RBI policy rate hike decision will also come in later this week. But talk to us about the current picture. How does it look to you from a market standpoint, from a macro standpoint as well? Are things pretty much panning out on expected lines?
Hi, morning, Karunya. Yeah, I mean, there are a lot of numbers coming out this week, next week too. So the first half of the month is extremely important. And then obviously, like you mentioned, you have the RBI policy later this week. When you look at the PMI, manufacturing PMI at 56.4, it was actually at an 8-month high. So we have gone from the June number of 53.9, which was a 9-month low, to an 8-month high. So for the last roughly year or so, the manufacturing PMI has been moving in the 54 to 56 range, which is good. They were obviously the internals were especially when it comes to prices, was particularly good, and that would enthuse the RBI because the input price inflation for manufacturers was at 11-month low in July. And when it comes to the prices charged by manufacturers, those are at a 4-month low. So that spells some good news for inflation going ahead. The other number which you spoke of, GST collections, 1.49 lakh crore rupees for July. That takes the average for the first 4 months of FY23 to 1.51 lakh crores. This is above analyst expectations, actually. I think a few of them were expecting an average of 1.45 lakh crores for the entirety of 1.4 of FY23. So in that sense, the government is doing well on the GST collections. When it comes to the RBI policy, obviously inflation is the big number. It's going to be the biggest determinant of the interest rate decision. The RBI itself has said that in the sequence of priorities, inflation, and it said this a few months ago, inflation has taken precedence over growth. CPI inflation data for July will be released exactly 1 week after the RBI details this decision on Friday. That's August 5th. So we have that to look forward to. But before that, there's a services PMI, which will come out on August 3rd. And it's difficult to see where there's going to be improvement. Just to take you back to the June number, June services PMI was at an over 12-year high of 59.2. And while you could see price pressures building up there too, but it's difficult to see how much more of an improvement we can see from the, of course, it's always there, but you can always see improvement, but it's difficult. It's difficult to say if you can see the same sort of improvement that was there in the manufacturing PMI.
Right.
When you come to the RBI...
Go on.
When it comes to the RBI decision, like I said, inflation is going to be the primary determinant. And the June CPI inflation print was 7.01%. So that was the 33rd consecutive month. It was above the 4% medium-term target.
Right.
The 6th consecutive month, it was above the 6% upper bound of the RBI's tolerance range. So the RBI is only 3 months away from failing to meet its mandate.
Right.
So it's very likely that by the time the September inflation print comes out in mid-October, the RBI would have to write what is commonly known as the letter to the government explaining reasons for its failure.
Okay. So just want to flag off, I stand corrected, it's the 13th consecutive month of manufacturing PMI above the key level of 50. I had earlier flagged off there was a 13-month high. So just wanted to clarify that. But Siddharth, I want to know... Look, I was reading a couple of reports later last night that Nirmala Sitharaman, the finance minister, has given out a statement that there is absolutely no question of Indian economy slipping into recession. She's also saying that, the measures taken by the government, the RBI, they've actually put India in a much better position than most other countries, given a host of initiatives that have been taken. Of course, the inflation number will be critical to watch out for. The projections will be critical to watch out from the RBI. But looks like this could be setting a tone for something perhaps surprising on the positive side, do you think?
Just to come to the finance minister's statements in the parliament yesterday. Yes, there is next to zero chance, I would say, of the Indian economy slipping into recession purely for the matter that the definition of recession, the common definition at least, is 2 consecutive quarters of a contraction in GDP. India is, even though growth outlook has dimmed since Russia's invasion of Ukraine, India is not looking at a contraction in the GDP. I mean, for that, you would have to go back to 2020 and what you needed when we had 2 consecutive quarters of contraction in the GDP, and what really precipitated that was the national lockdown. So the finance minister is right, yes. But there is no denying that growth outlook has dimmed. The RBI's forecast for FY23 is 7.2%.
Yeah.
And that is slow. I mean, it has not changed that forecast since it made it in a few months ago, in February, if I remember correctly. Slowly, over the months, it has started to appear to be on the higher side. Last week, we had the International Monetary Fund cut its own growth forecast for India by 80 basis points to 7.4%. Now, it's important to keep in mind that the IMF's forecast, at least when it comes to India, is very lagged. So by the time it makes its next forecast in October or late September, we'll see another revision to that. We'll most likely see another revision to that. But economists are perhaps closer to 7 and maybe even under 7. We were speaking to former chief statistician Pranab Sen last week, a couple of weeks ago, and he said that India would be very lucky to have 6% GDP growth in FY23. Just a few days before that, Nomura downgraded its growth forecast for 2023 by 70 basis points to 4.7%. So there is no denying that we are seeing slower growth in the coming quarters. Some of it will be because of the RBI's rapid tightening. We've seen 90 basis points of repo rate hikes already in FY23. Another at least 35 basis point of rate hikes is expected on Friday. So all of that will take its toll on the economy.
All right, let's see how the markets are prepared to digest, this news flow and these updates coming in from RBI in terms of commentary and rate hike decision. Going by the past, looks like, the markets were pretty much pricing in all these macro figures and, economy-related commentary. But let's see how the RBI commentary will be perceived and will be digested. Thanks much, Siddharth, for joining in. All right, back to the markets with Kunal. Lots of queries already coming in. I want to flag off a Hindalco first. We've got a query from Vimula Ravi. He wants your view on Hindalco and good gains actually. Last 1 month, the stock has added slightly more than $100, per a piece on the upside. Talk to us about the future forecast and what the technicals are indicating.
Pardon if I talk about the metals as a space, we had seen a massive sell-off in the metal space. Now we have seen a rebound from the metal stocks from an oversold territory. If I specific talk about Hindalco has been one of the outperformer in this pullback rally. So on the upside for Hindalco on a technical chart, 440, 445 is a resistance zone. Currently it is trading at 424. So can expect more 15 to 20 points up move in Hindalco from the current levels. From there, it might again slip into a slight consolidation phase. The lower end support for Hindalco is now placed at 380 zone. So 380 to 440, this is a range what I'm expecting. But from the current levels, for a quick gains, one can expect 15 to 20 points move in Hindalco on the upside.
Okay. Next question is from Praveen and he wants to know how Infosys is placed. Again, it's been a rough couple of months for all the tech giants. Infosys, of course, was no different. But it has recovered from those 1380, 1385 levels, slowly inching above 1550. So tell us, do you see some more volatility on this counter or has it largely going to be a stable up move now?
Just to give you a perspective on the whole IT sector, IT as a sector had seen a massive sell-off from where we have again seen some mild pullback. Now, what has been the concern for the IT sector? Generally, when the rupee depreciates, the IT sector benefits where they benefit from the exports. But this time it has been the reverse where USD INR went to the levels of 80, but it was IT who was still struggling at the lower levels. So from here onwards, if things settle down and rupee starts to appreciate from the current levels, it will be again some panic for the IT sector where again they will be seeing some pressures on their margins and profitability as well. So adding to that fundamental and the technical perspective, IT might consolidate for a larger period of time. However, for the near term, IT for Infosys specifically, if I talk about 1600 is the level on the upside which I can expect. Infosys is still trading below its 200 DMA. So market has surpassed Nifty and Bank Nifty has surpassed its 200 DMA level. But IT as a space and Infosys is still trading below its 200 DMA. So no point to be aggressive long at the current level since we are already trading in a downtrend. But yes, a pullback rally till 1600 can be expected from the current.
Okay, that's heartening to know, I'm sure, for many of the investors out there for Infosys. Gopi Krishna has written to us. He wants you to give us a comparison of sorts between HDFC Bank and SBI. How are they both looking on the charts? And do you like one more than the other, perhaps?
See, I think banking as a space has seen some massive correction in the recent times, but that was a base formation which was happening. So for the next 1 year or so, for a long-term perspective, I think banking as a space looks very good. If I compare between HDFC Bank and SBI, from a technical perspective, I think SBI looks much more attractive, where the stock has given me a good triangle formation breakout on the technical charts. So this rally is likely to continue towards the levels of 600 on the upside. So definitely, if I talk about a preference perspective, SBI will definitely be on the top pick. But even if I talk about HDFC Bank, it has been the market leader, and it is going to go ahead also see some great momentum. So HDFC Bank recently has surpassed the levels of 1400, which was an initial resistance. Now the stock is exactly trading at its 200 DMA, which is placed at 1450 levels. So I think this is the point where we can see some profit booking coming in for HDFC Bank. So HDFC Bank will remain as a buy on dip approach, but SBI even one can add at the current levels.
All right, okay. How about Tata Steel? I know you were sharing that how the entire metal pack has seen a massive sell-off in the recent past and could be trading range bound. But Tata Steel, any different? Shubham Srivastav has posted a question. If you'd like to take it up.
Again, if I talk about Tata Steel, I think two stocks from the metal space, Hindalco and Tata Steel, are my top bets, where we can see some good buying coming in going forward as well. From a trading perspective, if I talk about, we have seen a good pullback which has come into the metal space. Again, Tata Steel, after the split which has happened, it is still trading below its 200 DMA. Now that 200 DMA is placed at 115 level. So it could go and test the level of 200 DMA, which is at 115. Currently, it is trading at 108. So probably a 5 to 6 points move still is left on the upside. But the risk reward is not favorable. So I would say keep a buy on dip approach. The structure looks bullish and it has formed a good base formation at the lower levels. So any dip you get in Tata Steel, that would be an ideal opportunity to go long.
Okay, all right. Last query that we can address today. Ayanti Ghosh wants your view on Asian Paints for the long term, and if you could suggest a good entry point. Just like many of these consumer names, it has seen a good uptake from second half of June onwards. I think from 2580 levels. Right now, it's perched at 33, actually firmly above 3300. So, is now perhaps a good time to enter? Or should he wait for some cooling off so there is better opportunity at a better price point?
See, I think paint as a sector, there's a lot of changes happening in the paint sector as well. We have new entrants coming in the paint sector, which is definitely going to, from a fundamental perspective, impact the margins of Asian Paint. But as we say, Asian Paint is the leader in the paint sector over here. Looking at the technical charts, the charts also suggest that there could be a broad consolidation phase for Asian Paint for the coming years as well. So probably it could go into a broad consolidation for 1 to 2 years as well. For a trading perspective, I think it is a buy on dip candidate. We have seen a good rally in the last 1 month as well. So I think it's time where Asian Paint might see some profit booking. It is facing a hurdle at 3350 levels as well. So that is again a resistance zone. So again, a buy on dip approach. If you get any dip towards the levels of 3300 or 3275, that would be an ideal level to again go long.
All right. What about your own personal favorites? Which stocks do you have on your radar?
See, I think, as I said, markets are likely to go in a consolidation phase, but there would be a sector-specific and stock-specific approach that will be continuing in the market. So, fertilizer as a space has been doing quite well in the last couple of sessions as well, and that is where the momentum is likely to continue. Overall, the entire fertilizer space has seen some good breakouts on all the chart, on all the time frame as well. So my top pick over there would be GSFC. Now, if you look at the chart of the GSFC on a daily perspective, the stock has yesterday given a fresh breakout from a sideways consolidation pattern. Now, the stock has even surpassed its previous week high, which again indicate the trend is very strong. So GSFC could be bought at the current levels, trading around 166, 167 levels. On the lower end, the support of the base has been formed at 160, 159 zone. And upside, we can quickly expect level of 175 on the upside. So GSFC is one stock from the fertilizer space, which is looking very good. Even the momentum oscillator, if I talk about RSI or the stochastic parameter, they have been in a strong buy zone, which again confirms the internal strength of the stock as well on the technical charts. So GSFC is my first pick on the buy side. Second stock, which I'm very bullish on as a space, is called as Reality. Now, Nifty Reality has again seen a massive correction. It was one of the outperformer when the 2020 rally happened. And from there, it has seen some good correction on the downside. Now, on the Nifty Reality Index, if I look at the chart, there has been some strong base formation which has been happening. So the launch pad has been already made, and I think it's ready for a takeoff. in the next couple of months as well. So I think from that space, overall reality is one stock which is there on my radar. Again, one of the niche players when it comes to the reality space as well. You look at on all the time frame, whether on a technical chart, whether it's on daily or whether it's on a weekly time frame, the stock has seen some good base formation with higher top, higher high formation, which has happened.
Okay.
Yes, yesterday again there were volume building happening. So overall reality is a buy from the current levels. 900 is a stop loss, and that is a support. And I'm expecting levels of 950 to 970 on the upside.
All right, Kunal, many thanks for joining in and sharing your picks and your views on various stocks and the markets. Guys, that's all we have in this edition of Morning Trade. Thank you for tuning in, but stay tuned for Money Control. We have Markets with Santo and CJ coming up next.